All right, let's jump into things. Where we at? 9:58. So basically 10 o'clock on that 4th of February. Wow, what an incredible sort of start to the week. Those gaps yesterday were probably some of the biggest gaps I've seen on a Monday morning. As I said, typically like you look at these weekend markets and they're 0.07%. These things were like 0.7%. They were like 1%. And then not only that, did it just absolutely run once it opened as well. But what we saw was obviously sort of like, overnight here, um, a sniff of a deal and sort of like, 10,000 troops going to the border in Mexico, delaying it for a month. And this is what I said. There was like, is this the hill that they wanted to die on? Is this the sort of thing that, like, I mean, end of the day, they want more or less the same thing. Yes, Trump's gone about it in a different way in terms of sort of like going, okay, forcing the hand using economics, using in a sort of, a pinch on the economic side of stuff. But it got it done. And you know what? It's like, it's a situation in which sort of like, he said he got elected under these sort of things. Now he's making it happen. And I think the market's like, okay, wow, you know what? He forced a hand. It happened with Colombia. I mean, that's a smaller sort of one, I suppose. It's now happened with Mexico. It's happened with Panama. I haven't actually seen up to date sort of where they are with Canada. I think sort of like last I saw he was having another chat with Trudeau. I don't know. I haven't actually sort of seen what the sort of how that's eventuated. Obviously, Xi is the next big one as well. But these people are sort of coming to the table, and it's kind of like, do you really want to fight some sort of economic sort of battle, shooting tariffs back and forth, just to sort of because you don't want to sort of put anybody towards stopping sort of drug stuff going over borders or illegal immigrants going over borders? Like, I don't think it's that big a sort of ask of it all from the US's side that these people would sort of destroy their own economies, or partake in destroying their own economies just to avoid doing that. Like, I mean, they sent 10,000 troops. I mean, that's it. Like, that's all it took, and he's delayed it for a month, and the market's reacted the way that it did. Like, oh my God. I have to admit, look, I always say there's three parts to a trade. There's the analysis, there's the execution, and then there's the management. And, the analysis was there, or at least I'm talking about for myself here, where I was sort of saying that, look, there was this window in which they could sort of work something out. And I said, look, is this the hill that they want to die on? And I just don't think it was. Things aren't completely out. I mean, it's been delayed for a month, but the market doesn't care. The market will move so much in 1 month back and forth anyway. Um, you know, we're working off what's happening here and there. Uh, Execution, I got in a little bit early with a few pieces, so that was probably a little bit poor. Management, I'll give myself a 50% mark in that because I got clipped out with some positions pretty heavy, but some other ones I sort of kept in. So, kind of all balanced out a little bit there. So anyway, enough of that. We can look at what's happening with the market here, and this rejection. I actually did a video yesterday. I typically don't do the Mondays because Mondays Asia session are just so quiet. It's not too much has happened in the first 3 hours between when the market starts for the week and when I typically do these videos anyway. So on a daily basis. But obviously I did one yesterday and I sort of said that like we were coming up here and this level that it rejected from on a technical basis is the underside of this channel and the underside of this wedge. So from a technical standpoint, this was an area that was very important. And it just so happened with all these things, as they do, that then the news comes along and sort of supports it as well. But as we can see, I put a little post up at the time and I said, look, it's survived this first little touch up over here. And it just really melted after that. So look, it's broken out of this channel. So you almost have to sort of think, okay, is it going to backtest the top side of this channel? Or was this whole section here a last hurrah to burn everybody out? because we know if we look at sort of previous tops on DXY, let's find something we can work with. It does have a habit of doing this sort of stuff. It's falling, it's falling, it's falling, right up here, and then bang, down, and then it actually, you see it sell down over here. I mean, even this is a smaller top here. Coming down, coming down, coming down, bang, last hurrah, and it moves down. Didn't quite get all the way up over here, but certainly, I mean, these periods here, selling down, poof, back up, selling down, poof, back up, selling down. Actually, where is this, 22? I remember this. This is like one of the charts put on the old Instagram thing, which I don't typically do, and what I do anymore. When I first started using that, was a show about 22 or so. But yeah, this was, we had, I think this was CPI here. So it's sort of like, you know, three lower highs, and the CPI finally came down, and boof, and it just, that was a massive start of a run of US dollar sell-off through there. So look, point being is that, you know, although these are on smaller kind of scales to the size of this move through here, this is very much the kind of stuff that we can see, and I've been tooting this horn a little bit, towards a sort of an actual turnaround. Because look, we've broken the channel. You need to respect that to somewhat, and that, yes, it's come down here, it's made a new channel, it's popped up out the top over here. This isn't confirmed till we get down underneath this area over here. Then we move down, still maintaining this price target down here. And this price target, you know, is still based more off the idea of this being, excuse me, of this being more of a sort of like horizontal support, and potentially, albeit this a little bit of an odd push up over here, a neckline. So I still think that this is the short-term target to send it down to 105. I do think we'll probably get a little bit of reaction once we do get down over here. But of course, this only comes once we see some actual continuation and move of this down here. If we continue to just, despite the sort of delay in the tariffs going ahead, or, you know, if there's a bit of a mixed bag, like we've sort of, you know, delayed Mexico, but Canada's still going or China's still going, we could obviously still grind up along the side over here. But given this just as a technical move and the size of this rejection after this move up here, it shows that you could see some momentum sort of come to the downside. Follow through and sort of come to the downside. But as you can see, you know, you really you want to get down underneath this area over here, underneath 107.3530, whatever, this kind of area here, to sort of show that this, as you can see, this is on a weekly. You break, you retest. Now you want to put in your lower low. Lower low, high high, they're the confirmation ones with it all. And as you can see, this whole little flare up here, again, this is just a weekly, this little flare up here so far, the RSI is definitely sort of not sort of showing at this stage it's supporting it. I mean, we've got NFP at the end of the week, which is obviously going to be a big one. So we can sort of see what happens with that there. Let's clear up these ones a little bit. So NFP can obviously change things around a little bit, but as a straight technical move, that's your rising support, that's your break, that's your retest. Now, underneath this 107, 107.20, whatever, a close is better. Down underneath here, you can see your move come back down here, and you can still see potentially this come into a bit of a head and shoulders to come down over here. If we put that back on the 4 hour for 2 seconds, that was the daily, was it? So doing these things kind of on the fly. Just like saying, if we could potentially see some sort of awkward looking double shoulder, kind of sort of head and shoulder thing down here, because I'm pretty sure this gap from here to here would be similar to from here to here. So I'm not a big fan of this, because obviously this has actually blown up through the top over here. But as you can certainly see, you know, you got higher, higher, high, high, high. Now you're getting your lower highs. This one obviously, as I said, served its purpose to come out here, stop a whole bunch of people out before you actually see the move. So I think it's very crucial at the moment. If we see a move back down underneath those 107s, I think that's, you know, a good case for continuation. And this is going to be coming in line with either and or sort of weak economic data. So if we see, the job numbers with NFP a little bit lower, if we see, any of that sort of weak economic data that supports the idea that, the Fed will be more leaning towards a dovish approach and a bit more sort of like, dovish approach, basically looking to sort of cut next time. I think that June is where they're sort of talking at the moment, but we'll see how these things go. But the point being is that sort of, oh, 8, sorry, 2 seconds. All right, I am back. Just needed to manage a few positions. So I've just kind of lost the flow of where I was talking about now. Oh, that's right. Yeah. So if we see these things sort of start to move down, it'll come from those, as I said, weak NFP numbers, sort of weak economic data, and or any sort of further sort of tariff talk. If we sort of see that, these other countries are kind of coming to the party as well, and we sort of see that China goes, hey, look, you know what? Let's work together, which is overwhelmingly what they seem they want to do. As I've said and harped on about the last couple of weeks, China's not in the same position as they were in 2016. I don't think they're looking to sort of really stick it to the man and, hey, we're coming up and we can do our own thing. They got humbled in a big way. And I think they're there now to sort of go, look, you know what? We can actually sort of work together and possibly sort of like do some good things, and if that requires us, you know, trying to address a little bit of sort of a drug problem, um, we're happy to do it. Even if they sort of just do it sort of more or less on paper, just do it for show. I think that that's something that sort of like, they'll be happy with. So anyway, look, there's a lot to sort of come soon. Yesterday was an incredible gap, of course, as we could see, straight up through here. From a technical side, we're back down to pretty much where we were Friday night, which obviously was on a little bit of a push. The cards have changed a little bit because we had obviously sort of like that tariff talk, which I've just been going on about. It's very important now to sort of see what the market does with this and what kind of continuation we get from this period here. These candles very much look like they want to sort of continue down, but of course, DXY is offline for another 2 hours. So we'll have to sort of see where that stuff gaps. But my bet is we'll probably see a move down to test this level over here, 107.75. We can see that this is obviously, an important, well, let's do this. This is a little important area that the market was holding and holding and holding. It does also come as a technical sort of back test of this channel here. And I think this is going to be a crucial thing here. So we're going to see something. Is it going to sort of bounce back up like this? Or are we going to see it continue down? But this is the area that I'm sort of interested in. Obviously, as I said, lower, 107.75. But I think if you break this area here, I think you're coming down here anyway. So this is why this is a sort of early warning, call it an early warning sign, this little zone through here, that we sort of see what happens. I mean, the opposite side, you've got to consider everything that, something happens and it comes back up over here. But just looking at the markets and the way that things are sort of ticking along at the moment, you could probably sort of say that we're most likely going to see at least a test up of this area down here. And then I would say we're probably going to break and continue, and we've got the momentum to keep coming down through here. This RSI looks like it wants to push down a little bit further as well. Maybe by the time it gets down here, we see a little bit of a bounce and a reaction through here, and maybe we get something more to this sort of effect going up and then come down through here. But I'm definitely sort of still looking for this move down over to this side. All right, cool. Let's take along. We had gold. Gold just ripped it yesterday. Look, very, very much in line with the sort of plan with it all. I was saying that sort of like, if we didn't hold 90, we'd obviously be coming down a little bit lower. It's very much just come back here, and you can see this is why it's important to leave these markings on the charts, because these are crucial areas. I mean, higher time frame, okay, yes, there's back test, but you're never going to get these things to the cent, are you? You sort of like come back here, back test, and on its way. Brand new all-time high, 28.30. It is absolutely ripping along. So from a technical standpoint on this, look, it came back down here, retested this other zone here, very much to the cent at 70, and then that was a big run. I have to admit, I missed this part. Actually, I did buy it at around 98, and I think I got out low 28s or so like that. But of course, one of these things, hindsight, yada yada, could have held it, whatever. Doesn't matter. The point here is that we are on a large time frame breaking out. We've tested it, we've broken through, we've back tested it, we've put in the higher high, and as I said, the higher high, low low, whatever, they're the sort of confirmation ones that you get there. So I think this pretty much opens the gate to sort of to keep moving forward. Um, Obviously, we're kind of sort of seeing how gold is reacting at the moment. A big thing that I've sort of come to sort of realize with my sort of trading so far this year is normal correlations out the window. Normal correl if you're working off your old correlations from last year, you're getting shredded because things aren't moving the same as they were a couple of months ago. Gold up, US dollar down, US dollar up, gold up, like it's moving independently. So you got to sort of identify what are driving each of these markets at the time. And, in the very immediate tariffs, gold loves the tariffs. And the idea that tariffs are still happening is what's been keeping gold moving all the way through here. We actually, excuse me, sort of after yesterday's sell down, ripped right up. What stopped it, what sort of hit it in its tracks, was the tariff talk. If you look at it on a lower time frame and see this move up here, and then sort of came back down, boom, I think it was around 2 o'clock that we heard the tariffs sort of come in. Or the tariffs sort of come in, I mean the tariff talk of it all. Let's just put a little zone in here, see if we can, work some things out here, because obviously this is a little bit of a resistance. Make it a little bit fatter. Actually, I'm not a big fan of anything too fat, but you can see here, resistance, 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 sell down, breakthrough, back test here. I'm not a big fan that this one here didn't continue and keep that momentum, so I'm going to monitor this to see if this level here holds. If it doesn't, then you can look back down to probably this previous top of this band over here, which kind of sort of showed us a little bit as well. Let's just get rid of this. So start to build the little zones that we can work with on more shorter sort of time frame of things. But certainly, if we sort of see this area hold and push back up here, you probably want to get above 23. You're looking obviously, $7 move to 30 for a test there, but potentially to keep on moving on. This price target would probably be fair to sort of move up just a touch higher now. As I said, pretty much contact with this rising resistance is probably where you'd be looking for this stop, apart from the idea of going up just over 2,900, which I do think we can do as well. Sorry, that we can do, that we will do. But in the short term, I think if you see a break underneath this 28.10, look down around the sort of 97 area, and then sort of look to sort of get onto something to this sort of effect, and then bang up through here. I think that's the play at the moment. This is the area you want to get above, and then you look that for a continuation. So they're the kind of little levels that I'll be looking for. Look at early indication above 23. I think you're looking for your test of 30. Close above 30. Then you're looking for 28.50. 28.50, big round number as well. Oop, I think that's a fair way to go. I mean, look, I'm not going to jump into anything too quickly here. The RSI could definitely sort of, chill a little bit through here. As I've seen sort of recently that, gold's been a little bit sort of dormant for the most part. Yesterday's obviously an exception because the whole market was moving through Asia. But for the most part, it's been a little bit quiet through Asia of late. So we can just have a look at a few bits here. Um, yeah, so I wouldn't be sort of like rushing into anything here, but I think it's certainly looking like it could sort of see this continuation through here. Um, yeah, I mean, it's certainly got the sort of momentum on its side. It's got the back test. It's got the big back test. I think this is definitely going up towards 2900. As cliche, it doesn't go in a straight line. We all get that, but yeah, in time. All right, back onto the next one. We got silver. Silver, very good with the back test here. As I said, over the weekend, I said 31 entries were still in play. This is obviously a box that is not being any good to us or any use. These little things have chopped out both sides here. And this is the play that we've kind of been looking for. Move up here, move back here to 31. As I said, 31 was the idea for the entry. It's obviously shot down a little bit over the top of this, but the bounce here has been very good. Yeah, I mean, as I said, 50 cents up from 50 points, 50 cents, whatever you want to call it, up from that 31 level back test. Yes, it shot down a little bit lower, came down to this little midway area we had, or just thereabouts. But as you can see, that last little hurrah shake. What time was this one? 2 o'clock with this as well. Bang, sold down hard. Tariffs are coming in or whatever. Boom, and moves on. So silver's a little bit funny because it kind of plays both sides of the fence. It's sort of it is a precious metal, but obviously it's still quite an important metal in sort of like manufacturing, and all this sort of stuff. So with that, it can obviously sort of like, the tariff news and things are going to be sort of quieting down, chilling out a little bit. It obviously liked that. I don't know what was happening. I think we had some data out around that time as well. Typically, I'm sort of up and awake through this, but I kind of called it yesterday, so you can see sort of what we have. I think there was like some ISM data through. It's actually sort of strong US data here. Sort of above expectations. Um, and obviously improving from last month. So quite strong US data there. So I'm surprised that the US sold off at that time. But obviously, whoop, show we on this chart. Obviously, sort of threw the market around a little bit. But that was about the same time that we had that sort of tariff talk. And so I think that's sort of telling that sort of like even with strong US data, the tariff stuff overwrites it as the driver in the immediate. So that's actually quite interesting. Look, next sort of level up, 32 is the sort of price I think you're going to have a little bit of trouble getting through here. I'm actually almost going to move this up just a touch and probably thin it out a bit as well and say that this is probably an area. It gives you another sort of 20 points or so, but I do think you're going to have sort of trouble getting through this area up over here. Not to say that it can't go through, but of course, as we know with these things, they don't go through first time. Unless it's like some massive driver, and I mean, in this sort of instance, it was coming back here, just cut straight through, but that's not really as important a sort of thing. Like, coming back up here, this is going back to December, it's fought its way all the way back up here. People are going to have price targets here. People that shorted this did very well coming down here. They're going to have another shot to try and short it again. This is very much the area through here where you'd want to be sort of, taking some profits. Let's get rid of this off. If you do get above here, well, bang, you're opening up and you do have a nice little run. There'll be a little bit of a stuffing around here, but you're looking up at around 33s again. But as we sort of know with these things, they don't go through first time. And so I would still give you another 50 to 70 cents in this move before we sort of see any sort of profit taking through there as well. Flip across and Aussie. Wow, geez, talk about sort of ugly. And this is one thing that I have to admit I did get ripped on a little bit. This gap down here, this was yesterday. I was like, well, over the weekend, I was like, okay, yeah, Aussie, it's got to hold 61.70. It opened underneath it and then just melted down through here. So we actually got down underneath 61 cents, which is just insane. Look, a bit of an overshoot, but it is a back test of the channel. It does do these deep back tests. I was thinking, oh, look, here's the breakout point. It's going to hold this. No. Okay, I'm like, surely it can't come all the way down here, test this level. well, you know what? It's like they say, sort of like, if you think it can't happen, that's when it will happen. And you need to keep powder dry for these things. And I love the expression, which I did come up with, so buy the tears. And this is a perfect time for it all. Gap down, people being blown out, took out the horizontals, and what does it do? Just rips straight back up and above where it was on Friday. But so it's back up into that little sort of chop zone that we were seeing through sort of Thursday, Friday, just prior to delay in the tariffs. Oh no, that was bullshit. Brr, boom, down like this. So anyway, so yeah, certainly one of those buy the buy the tears situations. If you look at this on a daily, look, you know what I mean. The candle isn't even really true representative of how strong this reaction is because it shows it, excuse me, with a large body through here, but really, because it opened up over here, put on a weekly, that doesn't really do it true justice because, really it should be a wick measuring tool. The wick should be kind of down here, which is 116. So what I look for here is kind of like, look at some other bottoms that we've had. This sort of melt down through here. I remember this, and I reference it all the time because it was the first day that I got back after Europe, and it just went boom. And this was 150 points it dropped. And I remember just looking at I was at my girlfriend's place, and then I was looking at because it's just on the phone there, I didn't have my screen, so I was like, well, it's dropped. Look at it a few minutes later, oof, it's dropped more, oof, it's dropped more. And obviously, bang reaction, and we just went on an absolute rip afterwards. So, look, not everything repeats exactly, but if we do sort of get these sort of levels back up over 63, then you know what they've done here. They've just blown out all the people. I mean, we had a nice little run here for 2 weeks and then smash back down. People that sort of don't take profits, people that sort of buy and they're going to hold it to all the way up the top, well, they're out. You know what I mean? Anybody that's sort of been holding through all these areas here, look, they're out, they're out, they're out. We're back down to, really, this is like kind of COVID levels down here. Obviously, still a fair bit off, but that was extenuating circumstances. But, down to 61, we haven't seen that since April 2020. So, better part, much, much better part of 5 years that we haven't seen Aussie this low. And it's just sold down so immensely. On a weekly, the RSI is tipping up despite this push down here. And as we know, that's a kind of sort of negative divergence. I mean, look, there's a lot still to happen this week. With, as I said, NFP is the big one. Whoop, okay, doesn't like that. I think I've got it saved onto this one. And above. All right, whatever. Go onto the weekly here. So you can see this is obviously moving up as that's moving down. Now, got to wait to sort of see. I mean, it's only, geez, it's only Tuesday. Oh, what a hectic day. Feels like a week just in that day. But it is moving in that kind of direction. Price is moving down. We got RSI moving up. That is technically what a negative divergence is. Now, it's as I said, it's not two things. It's not confirmed, obviously, pretty much. So we put in that high. So as I say, get above 33. This is where you want to see it move. May not necessarily move as big as this candle, maybe over extended. Maybe this one. That's probably more like it. But anyway, the point is that should it hold this, and certainly if we should see some sort of continuation above, if it can get above, I mean, we're 80 points off now, above 63, then you see that move up there. Now, this is obviously sort of like a little way off, and, one bounce just to close the gap and overshoot it a little bit doesn't mean that it's a full recovery. And technically, as you can see through here, we're just back up into that chop zone. But this is a nice sort of bullish momentum move through here. It's obviously stalling. It's the early hours of the morning kind of thing, so to speak. No, what are we, 10:30? Should this flip? So let's pull this here. Yeah, and make this one flip. range for bullish. That's it. That's your sort of signal. It's not only just to sort of flip it, but it's obviously to take out that little candle that we had overnight as well. So where was this one? 38. 38, boom, 62.38. Look, RSI is there to support it should it want to sort of flip this and move up here. I think you're going to have a bit of trouble around that 54, which is around that level where we had that little spike up for 2 minutes or an hour or whatever, just prior to, off that headline of like, oh, it's going to be delayed. I think that's probably your realistic, your intercession kind of sort of target up to 58, so another 30 points or so, which, you know what, it's got momentum behind it. It could actually sort of continue on with something like this, should it not just sort of fall in a hole. I think sort of underneath this wick down here, underneath sort of 62, then we see this close the gap, and then, you're just playing with these levels down here, probably 61.70, again, coming into play as your bottom of where you may sort of want to hold. But, these kind of moves down here, I sort of, I had a mate sort of send me sort of videos like, oh, some headline of this thing, it's like, Aussie cuts through 61 like butter. Like, well, it went 20 points underneath it, cut through like butter. Jeez, I hope he put the house on it short, because this is how they feed these moves. Not only are you sort of stopping out longs and all this kind of stuff, you're getting these people in that are like, oh, here's the support, it made a new low. Let's put the house on it now. And they go boom, and they squeeze it up the other way. And that's the whole point of these things. You need something to feed these moves, because as these people's shorts close, that feeds the move going higher, just as it does the other way with longs and all that kind of stuff. But you've stopped out the longs, you've dragged in a bunch of sort of shorts down here. How far do they want to push it? How far do they want to squeeze it? And again, if you go back and sort of look at these other periods, like this bit here, I mean, this came down, took out all the lows, drop, massive candle down, and then look at the resulting move. Very big, up to yearly highs. Now, again, I'm not sort of saying that we're going to see exactly the same move, but this is how these things work. And you've got your channel, you've got your sort of, look at this, negative divergence, nice, beautiful, and then bang, down. Anyway, the point is it's, you've got your channel, you've got your back test, markets obviously reacted, whatever reason, they did react at this level here. You want to see this momentum continue though, and this is why we've got these little alerts through here and that. So first thing to flip the 4 hour, which is this level here at sort of 39, above 57. Above 57, yes, you've got other little levels through here, but I think, yeah, you'd probably be targeting then 60, 63 above here. So let's just load this up and change this one. Recovery effort, target 6,300. Breakout line. That's a 40-point move, 0.75%. Should you get above that level there. So they're the kind of sort of levels that I'm looking for here. If you break underneath sort of 62.05, okay, well, hurrah's gone. We look back at 61.70. Break above sort of 62.40. We're looking for 62.60-ish, so 65-ish, these highs. Break above there, then we're looking at 63, and then we can build on it from there. It's really just how much of this momentum sort of carries through. I don't think we got so much data coming out today. No, it's looking fairly. We got sort of some Fed speaker coming out. I mean, you get these sort of Fed speakers and that every now and then, and yeah, and then you'll sort of see everyone will get sort of hyped up and sort of rally the US dollar for a little bit there, but. Yeah, we'll see how we go. We got Jolts tonight. Jolts is looking to come in marginally lower. Obviously, that's more on the weaker side. Employment for New Zealand. Not a great deal of data coming out. We had some Chinese data yesterday, which I think was a little bit weak as well. And then, yes, non-farm employment change. That's all that. Okay. That's ADP. Sorry, what am I doing? What am I doing? I'm like, hold on, wait, not fine, not fine. No, ADP, which is of course the private sector in that. So we got JOLTS. So JOLTS are the job openings. Then we got the ADP, which is the private, sort of maybe the government sector, and then you got NFP on the Friday, which we're looking for this to sort of come back to reality and see. I'm really looking to see how this number here gets revised because I think last month they really needed to shock the market a bit with a high number there. All right, so moving on, where we got copper. Copper, as I said, I haven't been a part of copper, and this shows why. Because I put this big box around it, and I said, look, you know what? As it breaks down under here, it's come down to this level over here, and I try and log it from down here. Didn't get down there, no fill, kind of no worries, but whatever. Look, what I am looking at with this is the fact that it's actually come through this falling resistance and we're back up into this little breakout line here. So this is the thing, all these things, so this is what I call sort of cross chart confluence that you're not going to see, well, not that you're not going to see, you can actually, it's about five thoughts in one there. Cross chart confluence are the fact that you're getting all these things coming into their respective support or resistance zones at the same time. You're not seeing it just in one chart and not in another. That was the first thought. Second thought with that is that that can create great opportunity if you see something lagging where they should have their correlation, and you should see these things moving somewhat together, or typically you do see them moving together. Bit of a wedge forming through here. And you do see them moving together. So if you see something sort of like lagging behind, that could be the opportunity, or it could be the tell for a potential opportunity sort of coming up. So point being at the moment, copper, Aussie, copper's fired back up, Aussie's fired back up. They're both at these sort of crucial points. If we see copper make this move up above here, see this alert going off, I did say at the start that normal correlations are out the window. Watch for this though, because Aussie and copper do have a history of having a good correlation. Doesn't mean it's going to hold forever. Doesn't mean they'll always react together. Aussie particularly as well. It's very temperamental in that. And for instance, like it should be moving well while equities have been moving well. Equities have been bashing out new all-time highs and that for the last couple of months. Aussie has just been absolutely dying in the ass. So, you know, correlations are somewhat out the window as well. But if we do see this break above here, I think you're going to see Aussie breaking at the same time. This is why I've got this alert over here. At the top side of the range, check Aussie. Because I think we'll be seeing a bit of a break at the same time and moving back towards 446 there. There will be a little bit of a sort of bit of headway just here. Whoops. A little bit here. But again, the way that we can use these potentially would be for a little break back test. As I said, things don't typically sort of break out first time, but you know, if we see it move to here, that could be the road or the path. Again, these aren't sort of time levels, they're price levels. A break, a back test. If it holds this area here on a back test, you see these sellers turn into buyers, support and resistance, the same thing, and they could be the sort of move. And then, of course, the higher high is the confirmation for the move through there. That's an early entry if you want to sort of be a bit, if you're a bit more sort of risk prone. And you can see that move up towards this level over here, but certainly very much bouncing back. Got a little bit of room to move at the RSI. I don't like that the candles are tightening up around here, smaller ones, but I mean, you can tell why. These are sellers here, sellers are here, sellers are here. Comes back up, well, it's no real sort of surprise. Sellers are here again, or people are taking profit. Price is stalling a little bit, plus that and the time of day that it is. It's a little bit quiet around this sort of point. So yeah, it's certainly one to watch with it there. China, as I said, gapped through the price target. Similar, and this was another thing that I covered in that video. It was a completion of the inverted head and shoulders. It was also confluence, retest underside of this rising support, similar to DXY, came into the very high time frame resistance area as well. really came out the top of all this sort of stuff. Just didn't get this wick here, but took out all these highs over here, and then it's just melted down afterwards as well. The PBOC came out and said that they reaffirmed the idea that they're going to hold, they're not going to let the Yuan run away. This is partly the reason that you saw this continue and sort of come down through this period as well. You know, I mean, there's a couple of factors with these things always, but and broader sort of sense of a US dollar sort of sell off due to the sort of tariffs and trade sort of vague resolution, even though it's with Mexico, the idea then flows across for, you know, one, all markets, because they were all going heavy hard on high tariffs, high inflation, rah, da, 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 kind of thing. So let's buy up the US dollar because the Fed's going to have to hold it, that kind of idea. If you take that out of the equation, that building block out of it, well, you know, that's the driving force that's supposedly going to be adding to the inflation. The Fed's not going to have to react. They can still talk about dovish stuff. US dollar sells off. That's how that works. Now, one specifically with them as well is also the idea that previously in sort of Trump's first sort of term, the Chinese were obviously in a stronger point, and they thought, look, they played a little bit dirty tactics, and they artificially sort of weakened the yuan to basically they use it as a combat to um, fight the tariffs, and they depreciated their currency to the tune of sort of about 10 to 13%. This has been a massive talk, and this is why this whole thing up here has been partly the reason for the yuan weakening so much as well, because it's sort of like they thought, okay, they're going to do the same thing again. And this is what I've been saying as well. China is not in the same position they were in 2016. They're now sort of coming out and saying that they're going to do what they can do, which, you know, I mean, you can't fight it. You know, you can have sort of big people in the market moving currencies and moving prices of things, but, you know, we've seen what happens with intervention. When central banks intervene, you can't fight that. They obliterate the price. We saw it with the yen a couple of months ago. We've seen it with China a couple of times as well. I think it may have almost been back over here or something. But anyway, whatever. The point being is that they've come out and they've said with the headline that they're going to do what they need to do to sort of keep that stable. That in turn obviously sort of shows and sort of projects the idea that they're willing to work with the US on a fair playing field to, you know, work out deals and work out trade, this kind of stuff. So they're coming to the party, or at least at the moment, you know, for, you know, you can never, I know it sounds a bit bad, but you can never really trust the Chinese or the PBOC, I should probably say. You can't trust, maybe I'm sure the Chinese people are nice, whatever, but the PBOC, you know, a lot of their numbers are generally pretty dodgy. I think that's pretty well-renowned fact. But the point is, the here and now, you've got to work off what is being presented to you. And what's being presented is the idea that they want to potentially sort of work with them to not let the yuan artificially weaken, and they're going to hold it in place. And we see that's another reason that this will sort of continue and sort of move down a little bit here. As to how far this comes, well, that's beyond me. Maybe beyond a few people on that, but certainly it's a continued move sort of coming down here. From a technical basis, you know, that's a retest of the underside. It's yet another test of this massive horizontal, and it's selling off. Down this level here, this is where we really see the action down through the zone over here. But for now, we know that the sellers are up here. That's one thing that we definitely know for sure. This is the line that they're holding. So we just got to see how deep this sort of comes back through here. Or do they rally it back up here? If they rally back quickly, bang, okay, well, maybe they're going to push it through. But as I said, if the PBOC want to sort of actually play ball, they will intervene and they'll do what needs to be done, in my opinion, to keep this subdued for now, at least. All right, and I think that's pretty much it, actually. So, yeah, a little bit of a sort of recap of it all. What we got in the news here? As I said, it's not really a great deal sort of coming out through Asia, so we'll see how yesterday's moves sort of filter out. Jobs tonight, 2 a.m., Jesus. Look forward to getting back to sort of that sort of winter timetable or moving. Yeah, I'd like to move to a better timetable, time zone. Moving through, so there's not really much that we're going through today. So let's just sort of see if how this sort of momentum sort of carries on with DXY. All right, that's it from me.